Hi, this is David Ford, President and Founder of the Atlantic Gold and Silver Centre. Today is Thursday the 22nd of November 2018, and today we're going to look at whether you should take advantage of the latest price dip and buy some Bitcoin. Now, if you're interested in cryptocurrencies, you will have noticed the big price drop recently. Bitcoin's been very stable at around 6,500 US since August. In fact, one commentator said it's been less volatile than the S&P 500. But that all changed recently. Bitcoin dropped from $6,500 down to $4,500. That's a 30% drop in about 7 days. So the question is this a buying opportunity? Now, when you look at other investments, fundamentals are important. For example, when you're looking at buying silver, you might look at mine supply, how much is coming onto the market. You might look at recycled supply, how much is coming back from people selling scrap silver. You might also look at the demand side, industrial demand for electronics, solar panels, and that might help you decide whether it's a good buy at a certain price. But for cryptos, there are almost no fundamentals except for the actual mining costs. So the technicals are very important. So let's have a look at the chart. Now, having a look at this chart, you can see the run up that happened in late 2017 right to a peak for Bitcoin of around $20,000, and then the subsequent ride back down, which was very volatile. The price bounced off 6,500 a few times and gradually stabilized just above that level in August of this year. And it didn't quite start breaking to the upside. It tried a couple of times to go through its 200-day moving average, but it kind of flattened out, and then we saw this little drop happen just a few days ago. The problem with cryptos is this: no fundamentals mean there are no value investors to halt the fall of prices and create a stable price base. For example, if you know silver is selling below its mining cost, then miners will reduce supply. Since it's needed for industrial processes, demand will continue. Ultimately, at some point, you know that demand will outstrip supply and prices will be forced to rise. So if silver's selling below its mining cost, you can be pretty sure it's a good value buy. Also with a stock, if a company's share price falls, at some point either it's going to be cheaper than its book price, the cost of the assets of the company, or the dividend yield is going to be attractive enough to attract investors from other assets. Either way, buyers will come in and halt dropping prices and eventually reverse the trend. What about Bitcoin? At what point is Bitcoin good value? Now, without the technology for Bitcoin actually being used in day-to-day transactions, which is what everybody thought was going to happen this year, there is insufficient real demand for Bitcoin. If it drops below its mining cost, the cost of producing one Bitcoin electronically, you might think that's good value. But the reality is, if it drops below the mining cost, it could destroy the whole concept of Bitcoin. If it drops below the mining cost, miners will stop mining. But the mining process is the process by which transactions on the network are confirmed. So no mining means no transactions. No transactions means a dead network. That means that the technology would become useless. Let's look at the chart again. On the right hand side we have the sharp drop, and what traders often refer to this as is a falling knife. And there's an old adage in the stock market: never catch a falling knife, and that's what we have here. Now, I'm a fairly cautious investor, and you never know how far something can fall. Markets often move far faster and farther than will seem logical. If it was me, I would wait for the bear market to stop, turn around, wait for prices to start posting higher lows and higher highs, and rise above the moving averages. Let's have a look at another currency, Ripple. We see a similar pattern here, the run up in prices in late 2017, and the volatile downtrend as it came back down, and the price continued to dwindle exactly the same way we saw Bitcoin doing. In this case, it approached 25 cents, but once it got to around 25 cents, there was a sudden sharp influx of buyers, and they forced the price up very sharply, up above its 200-day moving average. Now, it's gradually stabilized off again since then, and on the right hand side we see it around about 44 cents. So the question is, while it's battling between the two averages, or the multiple averages that are there, the $1 million question is, which way will it go? Is it likely to break out and go to the upside? Or will it just revert back to its long-term trend and start going back down again? So if you have money to risk and want to buy cryptos, Ripple technically looks in a better position than Bitcoin, Litecoin, or Ethereum. For me, however, there's another old saying: the trend is your friend. And right now the trend for cryptos is mostly down. Is Ripple strong enough to break the trend? Well, I'm personally not prepared to risk money that it is. I'm going to wait and see if the prices start to rise above their long-term moving averages. However, if you really want to get into cryptos, I would have to say that Ripple possibly looks a little bit better condition from a technical basis than any of the others. The alternative would be look at gold and silver, both of which we did a video about recently, are actually very close to their mining supply costs. And you know that in those commodities there is very real demand that will help force the price up over the longer term. Thanks for watching, and see you again in a few weeks.